I'm so glad that you made it into this week. And by God's grace, you are alive and the family is also alive. I hope your week was not hectic as mine. And even if it was, remember, Lamentation 3, verse 22 and 23 tells us that by his mercies we are not consumed, great is his faithfulness. And so he's always there for us. Thank you so much. I hope today you are going to join us with your family. Call the entire family to join us. And let's enjoy ourselves this evening. With the topic still on insurance. Last week we heard a lot from the Deputy Commissioner for Insurance. And he's here with us once again to continue with what we call motor insurance for this very week. And so I hope you stay tuned and listen to him. And with me is my guest, Mr. Kofi Ando, the Deputy Commissioner for National Commission for Insurance, the National Insurance Commission. Elder, you are welcome.
Thank you.
Oh, is that all? I know this week has not been easy.
No.
Yes.
Very hectic.
No. Yes. Yes. But we thank you so much that every week when we call on you, you really come. Today, I want to ask you a question.
Please do.
Where is your hometown?
I come from Bojuasi.
Good.
Awutu Bojuasi in the central region.
Oh, Awutu Bojuasi.
Yes.
We are so grateful that you've raised a great man like Elder Ando. Elder, tell us a little about Bojuasi.
Bojuasi is in the central region. Everybody knows Kaswa. Mm-hmm. If you are heading towards Winneba from Accra, you get to Kaswa, you take your right and you just head towards Bojuasi. It's mainly a farming community.
Oh, okay.
And the town has grown quite big. We used to enjoy our childhood days there, and yeah,
the mangoes climbing, the coconuts.
Yes, mangoes, coconut, oranges, yams, maize, food in abundance.
Wow.
Bojuasi was a nice place to grow up.
I believe by now things have changed.
Yes, things have changed a little bit. The market is not as vibrant as it used to be when we were children. And the places where we used to farm now, all those places are residential places now.
Wow.
So a lot has changed.
I hope you want to greet some people. Say hi to some of your people there for me.
So many of them. So to the Bojuasi SDA Church, now it's the Bojuasi Central Church.
Okay.
My greetings to all of you. My greetings to Pastor Polly and the Eshen and all the elders of the Bojuasi district. My special greetings to Promised Land SDA Church. That's the church that my late father founded before he left us. And my greetings to all of them.
Wow, I'm tagged. Elder, Mr. Ando, grateful. We are grateful to you. Viewers, we will just go for a quick break. When we come, we will go into our topic on motor insurance. It is an interesting topic, so don't go away. Stay with us. And let all people that you can invite join you too to watch this program. Thank you. We'll be right back. Welcome back. I'm glad you are still there. So as I said, we are going deeper into motor accidents, motor insurance. And you know, Ghana has an act that talks about an insurance where when you are in a car and then the car gets into an accident, the driver has himself, the passengers and everybody must have something. And so we are going to discuss all these issues concerning motor insurance for us to know exactly what to do, our right as pedestrians, as passengers, as car owners and drivers. So, Elder, today I want you to feel at home because I'll bombard you with questions. First, what is indemnity?
Indemnity is a major principle of insurance. Insurance has some major principles on which it thrives, and indemnity is one of them. It practically means that if you buy insurance and you incur a loss, the insurance company is supposed to put you in the position in which you were immediately before the loss.
Okay.
It means that you cannot profit from insurance. The insurance company is not supposed to make you better than you were before you incurred the loss. It's supposed to put you where you were before the loss. And that is why if you buy a car, a brand new car, and you insure it, and after 5 years you have an accident, the insurance company will not buy a brand new car for you because your car was 5 years old when you were involved in an accident. So you can't get a better car than you lost. Okay? That is also the reason why you cannot take two insurance policies in respect of the same vehicle. Okay, so if you insure your vehicle with, say, Enterprise, you cannot insure the same vehicle with Vanguard. If you do and there is a claim, those two companies are supposed to come together and compensate you, put you where you were before you lost your car. You cannot get a claim from both companies. Otherwise, you are benefiting. That you will be defeating the principle of indemnity.
That is my own money. I decided to go two ways so that I'll be free.
Well, it's a fundamental principle in insurance, especially in non-life property insurance. You are supposed to be indemnified. You are not supposed to profit from insurance. So it's actually illegal to insure your vehicle or property twice. If you do and the insurance company do find out, at the point of claim, they will contribute to indemnify you for the same property. You cannot get two compensations in respect of the same property.
No. Now, Mr. Ando,
Yes.
let's come home.
Yes.
Anytime I hear of motor insurance, my mind always goes to the motor we drive. So I was thinking car insurance is different.
Yes.
Because we normally use, I'm going to insure my car. But now there is this big term motor insurance. So what does it mean?
You know, there are motor vehicles.
Okay.
A car is an example of a motor vehicle. Because a car is not the only vehicle. There are lorries, there are vans, there are articulators. So a car is only a type of motor vehicle. So any moving equipment that is mechanically propelled, that is how the Motor Third Party Insurance Act will define a vehicle. Okay, so any vehicle that is mechanically propelled is a motor vehicle.
And bicycle part?
I don't think so.
So when I'm driving on a bicycle and I get an accident or hit somebody, that one, there is no insurance for me.
Well, if an insurance company is willing and has what it takes to insure a bicycle, that is fine. But under the Act, bicycle riders are not compelled or required to insure their vehicle.
A real motor is part.
Yes, a motorbike is supposed to be, because it qualifies as a motor vehicle under the...
So what are some of the kinds of motor insurance we have in this country?
So we can talk about the kinds of policies and we can talk about the kinds of covers that are available. So you can get three main kinds of policies. You can get a third-party policy, you can get third-party fire and theft, and you can get comprehensive. Okay, so third-party means that whenever you use your vehicle to injure somebody or to damage somebody's property, the insurance company will pay some kind of compensation to that person, and that is all that you have. You can't get any other thing. Third-party fire and theft means that in addition to your liability to a third party, if fire destroys the car or thieves steal it, you are covered and nothing else. Comprehensive, as the name suggests, is comprehensive, and the cover could actually be quite wide, from damage to your windscreen to a whole lot of things that are covered.
Anything around the car.
Not everything, but
Okay.
most of the things. Usually, the insurance company will give you a list of the things that are excluded, but basically, most of the things you can think about. So, when you have a comprehensive, it covers third party as well as the vehicle itself, and most damages to the car will be covered under a comprehensive.
So for the third party and fire,
Yes.
when the windscreen, in fact, when you are driving and if somebody just hits it with a stone and the windscreen is broken, but you've done third party and fire, that one doesn't cover
It's
you.
not covered. If you have third party fire and theft, it doesn't cover your
So it's only
windscreen.
when your car is bent or somebody steals it
Yes,
before you
as
get
the
it.
name suggests, it's third party fire and theft.
So why that third party? What is that third party means?
The third party is your liability. You know, when you do insurance, you are the first party. The
Okay.
insurance company is the second party.
Oh,
So the third party is somebody whose property you damage or somebody who you injure with your vehicle in the road.
Oh,
So that is the third party.
okay. Good. Good, 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 good. Features of motor insurance.
Um, so as I have said, I have talked about quite a
lot.
few of them. So I've talked about third party, I've talked about third party
Third party
fire and
fire.
theft, and I've talked about the comprehensive. The other thing to know is that the third party has a limit. So they call it third party property damage limit, TPPDL.
Yes.
Whenever you take insurance, you would see TPPDL and they will put a figure at the end. It means that that is the maximum amount the insurance company will pay if you ever damage anybody's property. So that is the third party property damage limit, TPPDL.
Third party property damage
limit.
It's sweet.
Currently, it is well, a while ago was just about 2,000. Now it has been increased to 5,000. But if you go and buy insurance, you can actually buy more, a higher third-party property damage limit. You can pay a little additional premium and they will give you more third-party property damage limits because usually 5,000 may not be able to take care of all your liabilities when you damage somebody's property. And then so when we talk about third party, there are two things. There's property damage and there's injury. Okay, you can either damage somebody's property or injure another person. A while back, there was almost no limit on the injury. Okay, so whilst there's a limit on the third-party property damage, there was almost no limit on injury. So if you injure somebody, whatever it costs to take care of that person. But that is causing quite some problems. So the current Insurance Act requires that the National Insurance Commission, by way of regulations, put some limit on the injury compensation levels. So the Commission is actually working on it to do that. And it is actually in everybody's interest that is done. Okay. So let me briefly explain why. So insurance works on the common pool, works like the common pool. The other time I explained that there could be 1,000 of us, and every year we would assume that 100 of us will be involved in some kind of accident. So what insurance will do will be to calculate how much it will cost to compensate the 100 who will be involved in an accident, and then share it among the 1,000. This is the pool. The thing is that we don't know who and who among the 1,000 will be part of the 100 who will be injured. So we'll share the costs of compensating 100 people among 1,000 people. You see, then everybody carries a little bit of the load. We put it in the common pool so that when the losses occur, we can take the money and compensate those who have Now, so if it so happens, so when they are going to do that, they would have to estimate how much it will cost to compensate the 100 people. So if they make a rough assumption that so it will cost them about 1,000 to compensate each person, it means if 100 people are going to be involved in an accident, we are going to need 100,000 to
Yes.
compensate those people.
Okay.
Now, if there are no limits, and it so happens that we pay one person 200,000, we pay another person 300,000. Meanwhile, we have contributed only 100,000 into the fund.
Okay.
What do you think is going to happen to the fund?
Lost.
Yes.
Great loss.
So there has to be some kind of limit to ensure reasonableness. The other thing that is also going to happen is that insurance is going to become very expensive. You know, because at the end of the day, we were expecting to spend 100,000 to compensate the 100 people, and now we spend 200 or 300,000. Then the insurance company will come back and say, let's reprice the product because the money we are getting is not enough to compensate the victims. So insurance is going to become extremely expensive, and people cannot buy it. So these are the reasons why they are, but it is within some level of reasonableness, so that whatever is arrived at, it has some ability to take care of the victims and their injuries and property damage and the other thing.
I think we are lucky to have first-hand information so that when it comes, you will not be surprised. Because those who have benefited at first will say that why this change, and it's going to cost a little. So it's good we have first-hand information. Thank you so much. But I know there is a term called NDC in motor insurance. Throw a little more light
It is
on it.
NCD.
NCD, not
NCD.
NDC.
That's right.
Okay.
No claims discount.
Okay.
NCD, no claims discount. And basically,
I thought, you see, my NDC, the name party NDC.
Okay.
Anytime I see N and the D, definitely there must be a C.
This is NCD.
NCD,
Okay, no
okay.
claim discount. And as the name suggests, if you insure your vehicle for a certain number of years and you don't make any claim, it actually means that you are a very careful person.
Okay.
You are not burdening the common pool that I talked about. You do your things quite well, and you must benefit from being a careful driver or a careful property owner.
Wow.
Okay, so you must pay less. You must pay less than those who are always injuring other people, because they are bringing more costs to the pool, so they must pay more. You know, in the contribution into the pool, it must be equitable.
Yes.
Okay, those who bring higher risk into the pool must pay more. So you bring a lower risk, you are more careful, you are bringing a lower risk into the pool, so you must pay less premium. So there's a discount.
Okay.
If you don't make a claim over a certain number of years, there's a discount that you are given to reduce. You could get as much as 50% discount. If you don't make a claim, I think over a 3 or 5 year period, you could get as much as 50% discount in your premium to reward you for being a careful driver on the road.
Mr. Ando, are you sure people know about this? Because the way we drive on our roads, careless driving, I don't think people are aware of this. If I knew very well that when I drive very well, this compulsory insurance issue, I will have some kind of discount, then people will begin to drive very carefully, so that accidents will reduce. I think the education on that hasn't gone very well. I don't know.
You are not far from right, but that kind of discount may also not be enough motivation for people to be careful on the road. But it's a very good point. I mean, if people get to understand that if you don't make any claim within a certain period, you are entitled to some discount.
It could. If it is 1%,
yes,
it's money.
It's money. Yes. That's true.
So I think we have to begin to experience that be careful a little the way we drive, and ask people, oh, if you drive this way, you have this kind of compensation. Then I think so, because the accidents on our road is becoming too much. You try as much as possible to drive carefully, but somebody on his way will just come in and viewers, we will be back. We it's becoming interesting because the NCD, me, I'm really interested in that. I want to, because the insurance money is not easy on motor. The amount for motor insurance is not easy. So don't go away. It's becoming interesting. We have a lot of things to discuss with you today, and I hope you are enjoying too. So stay back and then enjoy yourself. Even if you have some small malt, you don't drink or leave some for me, okay? We are enjoying. We'll be back. Welcome. It is good. We are continuing. Very, very important. We ended on the NCD. And if you are first, you are now joining us. This is Family Life, and we are discussing motor insurance. We've talked about a lot of things. So if you are now joining, you've missed a lot. We have discussed about indemnity. We've discussed about why we should insure the TPPDL. It's not easy. And then we are on the NCD. And there is something I want Elder to also, Mr. Ando, to talk more about it. Elder, sorry, Mr. Ando. Can NCD be ported?
Yes, that CD can be ported. And what it means is that if you are insuring with ABC Insurance Company Limited, and you've insured with them for say 5 years and you have never made a claim, and therefore you have about 50% discount with them. If you decide to change insurance from ABC Insurance to XYZ Insurance Company, you can actually transfer that discount from ABC company to XYZ company.
Lord, I'm dead. Ms. Ando, it means I'm not saying the insurance company are cheating us, but I want to say that because we are not aware. We don't know.
Well, if you meet good agents and they will tell you, they will ask you whether you have a discount from your, or if they get your renewal notice from your previous insurers, it will show all the discount you are entitled to. And so if they are whatever, they will know that you have a discount, and they would give it to you. But if you know and you ask, it's also good to know that you can port it. So if you are changing insurers and you have it, I mean, if they forget or ignore it for some reason, you can just remind them that, look, I had 50 or 30% discount from my insurance, so you have to give it, and they will give it to you.
No, but at times, I'm sensing that because some want a little bit flexible insurance packages. We move from one insurance to another without even any communication.
That is the problem. So if you, for example, it is difficult for just use your mouth to tell your new insurers that I have a discount. They must have some evidence.
Yes.
So if you have a renewal notice or something from your previous insurers that shows that indeed you were insuring with them and you had insured with them for so many years, and this was the discount you were getting, that will be enough basis for them to give you.
For me, my car have drove for almost 10 years. One claim.
Well, so it depends on at what point you made that claim and how it affects. And
we've transferred to a different insurer. So you see. So
the 5 years, I think the first discount is 3 straight consecutive years without a claim.
Okay, 3 straight.
Yes, 3 consecutive years without a claim, and then you are entitled to. If you move on to the 4th year, the percentage increases to the 5th year is the maximum. So if you drive a minimum 3 years, 3 consecutive years without a claim, but if you make a claim in between, you lose the discount and you start again.
It's not straightforward as I was thinking.
Yeah.
Oh, okay. So is it compulsory to insure your car?
Yes, it is compulsory to insure all motor vehicles. And as I told you, the Third Party Motor Insurance Act actually requires all mechanically propelled vehicles on the roads to be insured. You cannot drive on the road without vehicle insurance. There are some exceptions made. For example, it's possible for you to make a deposit with the government. The whole idea is to protect the innocent third party. I was telling you about the third party. Okay, so God has blessed you. You have found money to buy your car, and you are driving on the road and you are enjoying yourself. Somebody is passing by. He's probably not as blessed as you are, so he's walking by the road. He's also entitled to part of the road to walk. Okay, and you knock this person down. At the time you knock this person down, you may not have what it takes to compensate this person. Okay, so insurance, third-party insurance has to come in. That is why it is compulsory, so that if you injure somebody or damage somebody's property with your vehicle, there's an arrangement, there's a mechanism for this person to be compensated, and that is why it is in fact, there are a number of compulsory insurances, and at the core of all these compulsory insurances is the protection of the third party.
Okay. And how is it that, like?
It's simple. So you see that we have compulsory fire insurance for commercial houses. Okay, that is because if you enter a commercial place and something happens, there's an explosion or something, then that person will be protected. There's something we call the public liability, and the National Insurance Commission is planning to have some designated places have compulsory public liability insurance of some level. If you can just cast your mind back, the victims of the June 3rd flood disaster at Circle, what do you think has happened to them? The victims of the Melcom disaster, the victims of the atomic explosion, what do you think has happened to those people? So if certain designated places are compelled to have public liability, then if they injure people or damage people's property through their negligence, then that policy will come in to compensate those, because those victims are innocent. Okay, they are just innocent third parties going about their lives, and through your negligence, sometimes they are maimed for life, and sometimes there is no arrangement to compensate them or take care of them. So compulsory insurances are primarily to protect innocent third parties who are injured or who lose their properties through somebody's negligence.
So are there some conditions that will propel insurance companies not to pay
yes.
benefits?
When you have a motor claim, there are a number of grounds on which the insurance company can repudiate. The word they use there is to repudiate the claim. And the big principle there is that if you breach the conditions of the policy, every insurance policy is a legal contract.
Yes.
And there are terms and conditions. There are things you must do and the things the insurance company must do. Okay, so we call them the conditions of the. If you breach any major condition of the policy, the insurance company will not pay. But let me talk about some specific ones that are very common. So if you get an unlicensed driver to drive your vehicle, and he gets involved in an accident, the insurance company will not pay, because an unlicensed driver is not supposed to be driving in the first place. It is illegal to drive if you don't have a license on the road. Okay, so if you're an unlicensed driver and you drive and you have an accident, even if there's an insurance on the vehicle, there will be no claim. The insurance company will not pay. Yes. So it is important to note that you cannot drive.
After all these contributions.
The other thing is that it's something that usually happens. Most of the time, people don't know. It's something we call change of ownership. Sometimes you buy somebody's car. Okay, that person had an insurance on the car, and you go and buy it from that person. Now, Usually when they buy the car, they say, oh, the person has already insured it. But the very moment you buy the car from the person and title is transferred from that person to you, the insurance contract is severed. It's no longer valid. Because insurance is a contract. It is a contract between that person and the insurance company.
And not
He
you.
cannot transfer that contract to you. You then have to go and buy your own insurance. You can go back to that same insurance company and buy the insurance in your name. Or you can go to any other insurance company and buy your insurance for the car. But if you just buy somebody's car, his or her insurance doesn't automatically get transferred to you. So sometimes people buy other people's car and they assume that, oh, there's already an insurance. The moment title is transferred, the contract is abrogated. So if you don't do it and there's a claim, and the insurance company notices that, but you don't have any contract with me. You say, oh, the car used to belong to Mr. Asumesi and he sold it to me, so I have a claim. They tell you that no, we won't pay. Because
Mr. Ando, what about maybe your husband gives his car to you for you to?
Yes, if you are driving your husband's car, it's allowed. There's no problem with that.
Okay.
If your husband
has
actually transferred
to your name
title to you, you must go and deal with the insurance, because you can, unless the insurance. But if the insurance were the title were in your joint names, then he doesn't even need to transfer. But if the title was in your husband's name and he transfers it to you, you have to go and fix the insurance, because the insurance wouldn't just transfer to you because your husband has transferred the car to you.
Okay, let's continue. Wow.
Yeah. So the other circumstance under which the insurance company will not pay is change of use. So when I was talking about kinds of insurance, I should have also talked about, so we have private insurance, we have commercial insurance, and we have corporate insurance. Okay, so we have private, as a family, you have a private vehicle. Your vehicle is private, so you can insure it. So it is for you and your family, for your private use. Okay, you can have a commercial vehicle. Commercial vehicle is usually used to carry goods or passengers.
Okay.
So goods or passengers, and usually there's a distinction between the two. And then there are the corporate vehicles, which are used for which companies do. Now, if you have a private car and you change it into a commercial car, you must go to the insurance company and change the insurance, because there are different kinds of insurances. Okay, so let's say you have a Toyota Corolla, and God blesses you and you buy a Land Cruiser, and you say, okay, I'll use my Corolla as a taxi. The day you changed it into a taxi, your insurance changes.
Wow.
That insurance you had no longer applies, because now you are using it for commercial purposes, and the insurance you had when it was private no longer applies.
Even if you've done the comprehensive whilst private, and you've changed to
once you change it from private to commercial to taxi, you have to go and change the insurance, because there are different insurance classes for private and a different class for commercial. The thing is that the risks that the two bring to the pool are different. The risk that a private car brings to the pool is different from the risk that a commercial vehicle brings to the pool. And so you pay different prices for them, and there are different conditions for them. So these are a few circumstances under which an insurance company will not pay a claim, even if you had a policy.
What about the motor compulsory fund?
The motor compensation fund. So there are circumstances under which accident victims are not entitled to any claim.
Okay.
And we have just talked about some of the reasons why an insurance company will not pay a claim even if there's a policy. So if there's a commercial vehicle, let's say there's a trotro or even a taxi, and the driver was unlicensed at the time the accident occurred, insurance company will not pay.
Okay.
And then supposing there were passengers on board the taxi or the trotro, it means that they are all at risk. Because once the insurance company will not pay, it means that those people cannot get any compensation from anybody. But in order to provide a safety net and to protect everybody, the National Insurance, in fact, the Insurance Act requires the National Insurance Commission to set up a fund. It's called the Motor Compensation Fund. So when genuinely you do not qualify for a claim from any company when you are involved in an accident, you can actually apply to that fund. But the fund only takes care of personal injuries. Okay, it doesn't take care of property damage.
Oh, okay.
Because it is supposed to protect lives.
Nice.
Okay, life is precious. We cannot put any value on life. Okay, so it's supposed to protect. So if you know anybody who has been injured through a vehicle accident and he is not qualified or entitled to compensation from any insurance company, they can apply to the compensation fund at the National Insurance Commission and they will be given some compensation. It may not be as much as you would have gotten from an insurance company if you qualified for a genuine claim. Because that is gratuitous. Okay, you don't have any contract with the comp fund. It's only a safety net. So it's not exactly what you get under.
What about the fleet?
Oh, a fleet is just a number of vehicles. Okay, so I think it's 5, a minimum number. Once you have about 5 or more cars, you have a fleet. Okay, and there's a principle in insurance that when you get a fleet, because of the numbers, you get a fleet discount. Okay, so when you have a fleet, it means you have at least 5 or more cars, and if you insure all of them with one company, the company can give you a fleet discount for having.
But you have to insure each one separately. You can't do.
They can do a fleet policy for you. But the details of each vehicle will appear in the policy. Yes, details of each policy will appear in the policy. But then it will you get a fleet discount on the vehicles.
Okay. Now let's move to the commercial comprehensive insurance. Because at first we were talking of the comprehensive for the private. Now commercial comprehensive, what does it cover?
It's the same. A comprehensive is the same. So there could be a comprehensive cover for a commercial vehicle, a comprehensive cover for a private vehicle, or a comprehensive cover for a corporate vehicle.
That one, what does it entail? If it is corporate or commercial?
So comprehensive basically covers damage to the vehicle, plus damage to other people's property, plus injury to third parties. Okay, so that's what comprehensive. So if you have a commercial vehicle, let's say a trotro, and you insure it comprehensively, it means that when it is involved in an accident, the insurance company will pay some amount of compensation to the third party whose property you have damaged, and it will also pay for the damage to the vehicle itself, your vehicle itself, and the passengers on board.
I want you to highlight these terms that comes with insurance. Named driver, any driver, and those kind. What does it?
So named driver means that when you go to insure your vehicle, you can say that only myself will drive the vehicle. So that is important. Usually if you do that, you may get a discount because they know that the vehicle will be driven by only you at all times. What it also means is that if another person drives a vehicle and there's an accident, they will not pay. Okay, but when you say any driver, usually the typical motor cover you will get from any Ghanaian insurance company is any driver, open driver. Anybody with your consent or authority can drive. Okay, that is what it means. But he must be licensed, and he must qualify, and he must not be drunk, and he must fulfill all the terms and conditions. But basically, anybody with your consent must drive. But when you say a named driver, it must be that person only. If any other person drives and there's an accident, the insurance company will not pay.
But we have something like that today. Is it happening?
It used to be there. I think it is still there. If you go to an insurance company and say that you want a named driver policy, I'm sure they will give it to you. It will come at some discount, but then you have.
Is the discount huge? Because my major concern, the amount what you pay on insurance for vehicles. At times when you think about it, you say, why? So if there are other areas where you can get some compensations and other discounts.
But, you know, sometimes you have to consider other circumstances. I mean, if you are very ill, very, very ill, and your car is the only one at home, and your son or your husband can drive you to the hospital, because you have you have put your name, I'm the only one who will drive this vehicle.
Because the vehicle is expensive.
Then when you are very ill, how do you get to the hospital? Because anything could happen between your house and the hospital.
It's true. Oh, okay. Anyways, it's interesting. In fact, there are some of these things we need to know. You know, most of the times we do make petty mistakes in life that if you get some insight into some of these issues, we try to avoid them. We will just go for a quick break and come back and continue. We have a lot of questions for Mr. Ando to answer, because we need to know much about insurance so that when we are going in for any policy, we know exactly what to go for. So don't go away. Continue to stay with us. We'll be right back. Dear viewers, welcome back. I hope you are enjoying the program, and Elder is giving us a lot of information that would really help us as a family, as individuals, and as workers and businessmen in motor trading. We will just go back to Elder, Mr. Ando. Mr. Ando needs to give us more because Oliver asked for more. So let's come to this point. You know, in Ghana we have government or corporate vehicles that people normally use. In terms of insurance, how is it like? Can I take the vehicle away? Or let's give us something more about it.
So insurance is a contract, and there are terms and conditions for each insurance policy that you take. So there are some vehicles that are provided by employers to employees, and there are terms and conditions that go with those vehicles. Some are for official and the private pleasure of the employee and his family. Some are strictly for official duties, and usually in the insurance policy, these will be spelled out. If it's strictly for official duties, it will be spelled out there. And so for those ones, if you use it for the pleasure of the employee, and the family use it for their pleasure, and there's an accident, the insurance company may repudiate it because you've breached the conditions of the policy. So it depends on the terms and conditions of the vehicle, which will be translated into the insurance cover as well.
Okay, so it means that anytime you are a government official or a corporate body and you are being given a vehicle, you need to really know exactly what it is for.
Exactly.
That
the employer must make it clear what use the vehicle can be, and usually that is reflected in the insurance policy. Okay. So sometimes you have
these insurance policies we don't read them. We just go and get the sticker and put it there, and off we do.
It is important to read. You see, that is why sometimes we just give insurance a bad name, and that is because we don't take the trouble to get to know the terms and conditions of the various types of insurances that we do. And then when there's a claim and the insurance company even genuinely repudiates the claim, we go on and on and on. But sometimes there are genuine reasons. Sometimes they are justified in repudiating the claim. So it is important for us to get to know. You just talked about your family vehicle. I don't know whether you have taken the trouble to take your policy document and read it from cover to cover.
No.
You haven't. It is really important that you do. It is important that
because
you do.
You want to avoid the police, so you just go, you get your sticker, you place it there, and off you go. Because I have insured myself, that is all. As to what the other time I was also referring to where my father died before I went to pick my insurance policy to read my benefits. So some of these things I think is very, very important.
It's
Any
important.
policy we take time to
Yes.
read through one after the other.
You know, buying insurance is like buying any other thing. When you want to buy a blouse,
Yes.
you go to a shop and you see the various kinds of blouses there, and you see one that is brown or white with black buttons, with sleeveless and short sleeves and long sleeves, and you decide which one you want, and you say, I want this one, and you pick it. So the same way, when you are buying insurance, you need to get to know what you are buying. It's important that you get to know what you are buying, what you are getting, and what you are not getting. It is important. I agree that sometimes when a sale agent is involved, the agent is supposed to tell you, but sometimes you only get answers when you ask questions.
Yes.
Okay, so it is important that as much as possible you get to know what you are buying before you buy. So it's an important thing that we all need to do. We need to get to know and understand our insurance policies well.
Mr. Ando, let's get into motor trading.
Okay, so there's motor trade, and they usually call it a trade plate.
Okay.
And this is usually used by the garages that sell motor vehicles. Okay, so the garages that sell vehicles all over the place. You know, they sell vehicles. They import these vehicles and they sell them. They don't import them for their use. They import them to sell. But even when the vehicles are at the garage and are supposed to be, so sometimes they have to move. Because sometimes they have to go and get petrol, or sometimes they have to go and fix something on it, or sometimes somebody wants to try them. Even when they haven't bought it, somebody comes to see the vehicle, he wants to try it, he wants to drive it around. So because of that, because there's a law which prohibits uninsured vehicles from the road, there is a provision for such vehicles to have some temporary insurance, even before they are sold to the permanent owner who register it in their names and all that. So that kind of insurance is called the motor trade plate. As you can see, it is for the motor traders. That's why it's called a trade plate. Okay, it's for the motor traders. So the usually it's a plate. Okay, the DV plate that you see. So you go and buy the cover. They usually don't cover much. They cover a third party. Okay, cover a third party, but they could cover other things. But usually the garages are required to have motor trade plate to cover the vehicles that they are selling. So those insurances are usually enforced until the vehicles are sold and the title is transferred to whoever buys them, who is then now supposed to go and do a proper policy for themselves.
Okay. Now, if I want to do motor insurance, can I pay it in installments? Hey, at the free or home?
Interesting question. Interesting question. So, a few years ago, you could do that, but it was changed. The NIC had to come out with a directive to prohibit insurance companies from selling insurance on credit. That policy was in the interest of the consumers, the policyholders themselves. Why do I say so? So during the era where insurance could be bought on credit, what used to happen was that insurance companies sold a lot of their policies on credit. And so at the end of the day, you would see that all the policies they have sold, or almost all of them, are on credit, and they have very little cash. Okay. What is supposed to happen? Remember when I started talking about the insurance common pool? The policyholders are supposed to contribute money into the fund. The fund is supposed to be invested so that when there's a claim, the money can be used to pay the claim. Now, here's the situation where people buy insurance for credit and never pay. And when you know that, if you get to understand that insurance expires after each year, once they don't pay and 1 year expires, the policy has already expired. And then there's very little motivation for them to pay the premium. Meanwhile, when there's a claim, how does the insurance company pay? Because the claim is paid out of the pool. So when they sell on credit and people refuse to pay and there's a claim, So the claim situation was actually bad at that time. So I think 4 or 5 years ago, the then Commissioner of Insurance, Miss Lydia Laribabawa, studied the situation and said, this cannot go on. I mean, this is too bad. We must do something about it because we must get insurance companies to pay the claims. Insurance companies have serious liquidity challenges because they are selling on credit. So what do? In order to protect these same people, we would have to get them to pay their premium upfront. Indeed, that is what insurance contract requires us to do. You have to pay your premium upfront.
But, Mr. Ando, some countries are practicing that.
Well, there are rules around them. Remember that in Ghana we have tried a number of things before we came to paying the premium upfront, and most of them were either abused or misused or whatever happened. In all the cases, previous cases, we were not able to improve the liquidity of insurance companies to pay the claim.
Okay.
And so we had to come to this situation to improve the liquidity of insurance companies to pay the claim.
Is that helpful?
Has helped a lot, a great deal. Now, insurance companies have the ability to pay. What is left is the willingness. There are two things, okay? There's the ability and the willingness to pay the claim. Before, because of selling on credit, the ability to pay was quite low. Now, there's a lot of liquidity. So the ability to pay is almost 100%. Now, the willingness to pay is the other thing. Of course, that's a behavioral issue. And the Commission has other ways of dealing with that. The Commission, as example, the National Insurance Commission has published the claims payment guidelines.
Okay.
We published it in the newspapers, and that was to inform consumers about what to expect when they put in their claims. So when you put in your claim with an insurance company and you see that there is a significant deviation from the claims payment guidelines, you can make a complaint to the National Insurance Commission.
Okay.
And they will call the insurance company to order and get them to pay. Once the claim is genuine, we will force them to pay because now they are collecting the premium up front.
Okay.
There's no excuse for not paying the claim.
I don't know if you have something to about this issue. You have co-insurance, and maybe there is an accident or something of that sort, and then one person takes the money and refuses to pay the others, or delayed in paying the beneficiaries. Is there anything like that, or are there?
Well, there is co-insurance, but usually motor insurance policies are not very big in terms of the monetary amount involved. So usually when it comes to motor insurance, you wouldn't find co-insurance. But when you come to big risks, such as big manufacturing companies or plant or insurance, because one insurance company may not be able to absorb all the risk, you would see a number of companies come together. That's why they call it co-insurance. They are coming together to insure one risk. There's a lead insurer. There's one person who leads them, and the others are the co-insurers or the followers. And once they do their contract, there's a lot of transparency. All the co-insurers know all the terms and conditions. The premiums are paid and are split among the co-insurers in the proportion, and the claims are paid in that proportion as well.
So what's really influenced the payment of vehicle insurance? The premium, what influences the payment? Why some have high, why some have low?
Okay. So I talked about the risks that the various policyholders bring to the pool.
Okay.
Some bring high risks, some bring low risks.
Okay.
So depending on that, so you would find that if you have a vehicle and it is for the private use of yourself and your family, you would usually pay less in terms of premium than a taxi. because a taxi is a commercial vehicle. It's running up and down all the time with passengers on board. If just involved in an accident, the amount that may be payable is going to be so high. So the risk rating of the use of the vehicle, so trotros and taxis would usually cost more to insure than private vehicles because, of course, the risk. So mainly it is the risk factor that determines how high. Also, when there's a high risk, then the price goes up. That is why when I was talking about the no claim discount, the NCDs, I was telling you that if you drive for say 5 years without an accident, it means that you are low risk.
Okay.
You are a careful driver, so you pay less than somebody who is making a claim every year.
Luxury cars, do they attract high premium or?
Well, so that is the risk is one. The other thing depends on the value of the vehicle.
Of the vehicle.
The value of the vehicle is also so. If I go and buy my Tico, and you go and buy your V8, of course, you know that you'll be paying way higher than I'll be paying because I have my Tico, which has a very much lower value than your V8. So the sum insured also determines. In fact, in comprehensive motor insurance, there's a rate.
Okay.
There's a rate that is applied to the sum insured to arrive at the premium. So when your sum insured is high, your premium is going to be high.
Wow. We are well educated today. And Mr. Ando, I want you to give your final word to your viewers.
Okay. Since this is a family life program, I would like to talk to families.
Okay.
If God blesses the family and you buy a vehicle or two, please buy comprehensive insurance.
Okay.
Don't buy third-party insurance because third-party only protects somebody else and not yourself. Why would you protect somebody and leave yourself and your family? Supposing you are in a vehicle with your family and God forbid you are involved in an accident, you have a third party, the cover will only take care of third parties whose property you damage or you injure them or something. What about you and your family? So I will advise families, if God blesses you and you buy a vehicle or vehicles, please take comprehensive insurance. I know it's a little bit more expensive, but it is much more useful. It is very, very useful. I strongly recommend that you buy comprehensive insurance and be careful not to do any of the things that will cause an insurance company to repudiate your claim. If you have bought a vehicle from somebody, make sure to follow up and go and change the insurance into your name. Make sure that anybody who drives your vehicle is licensed, has a valid license. It is important. If God blesses you and you buy a better car and you change your old car into a taxi, please go and change the insurance. Otherwise, the old insurance you had will not cover the new use to which you are putting the vehicle. So this is the advice I have for families.
Wow. Mr. Ando, thank you so much.
You're
In fact,
welcome.
today has been a wonderful day. And
Welcome.
I'm so glad that I know you have a lot of activities after here, but you have made it to educate your people, for them to know much about insurance. In fact, we've enjoyed it so much. And I thank you so much for coming. I always pray that God will continue to bless you and make you higher and higher. And
Amen.
Mrs. Ando, don't forget the fufu. And then, there is one particular food I know she likes so much, and I like it. Nkrandokono. So the bourgeoisie nkrandokono.
Yeah.
Mrs.
That's
Ando.
one thing that makes me miss bourgeoisie.
Wow, wow.
Nkrandokono is good.
Wow. We are grateful for coming.
Yeah.
God bless you so much.
Amen.
Viewers, I hope you have enjoyed today. Mr. Ando has given us a lot of information. And the caution is, when you buy a car, even though it is expensive, try to buy comprehensive insurance to cover you and your family. Don't buy third party and cover another person and leave your family. We all need to live and enjoy our families. Family is very important. That is why God created it. Let's protect ourselves and let's stay safe because tomorrow nobody knows. It is only God who knows. And as I said earlier, He's saying that by His mercies we are not consumed. Great is His faithfulness. May this grace take you through this week and hope to meet you next week. Goodbye from Family Life. Stay blessed.